Hi guys, so welcome back to episode 2 of this series. Today we're going to be talking about the savings and investments. Of the last week we talked about income and tax efficiency, and our friend Mohammed here had a lot to say about all of that. And today's going to be actually quite juicy one. It's investments and savings, and this is a huge topic.
Yeah, no,
There is just, savings for a start. How do you save as a pharmacist? How do you start working out that perfect calculation of how much you're going to spend per month and how much you should be saving? And then once you've saved it, what do you do with that money? Where do you save it?
Yeah.
There's quite a bit of a big topic, honestly. Where do you invest that money? And in terms of, do you properties or do you invest in a business? Or there's so much to talk about there.
Yeah.
So first thing first, what is the best strategy for a long-term wealth? Stocks, buy-to-let, mortgage, funds. I know we have some experts on our pharmacy lounge who really they're just really into their stocks and shares and ETFs and bonds, and that goes way over my head. I mean, I did CFD once, which kept me awake. And I was trading like a maniac as well.
Tohidul,
times are good back then.
when it comes to CFDs, I'm well aware of the investment universe. Okay, I have advanced qualifications in all of these spaces. But if there's a lesson for yourself or any of the viewers, I don't manage my money. Okay, let that be a lesson. I don't manage my own pensions and investments, despite having advanced qualifications in this space.
Okay, that's surprising.
Okay? The reason why, it's a totally different discipline that requires day-to-day monitoring. So I purposely entrust expert fund managers to look after that aspect that I don't need to worry about.
Okay, so where does Mohammed, the expert in wealth management, invest his money?
Okay. I invest in a variety of different asset classes. Okay. And this will resonate, hopefully, with the viewers, who are involved in, let's say, DIY investing. And as I've intimated, I'm definitely against DIY investing for a plethora of different reasons. Okay. But effectively, when I set up my investment vehicles many years ago, I was looking at my investment horizon. My investment horizon is very long, largely because I was a lot younger. Okay, so if you've got a 30+ year investment horizon, you can afford to take silly risk in a regulated environment. Okay, keywords here, silly risk in a regulated environment. Yeah, the keyword being regulated. Okay,
so when is silly risk? Define that.
What I mean by that, I am about to. Okay, silly risk means just high risk, 100% into equities, listed stocks. Okay, so listed stocks and shares. Okay, I don't have any exposure, or in one aspect, I do have limited exposure to what we call fixed income. Okay, fixed income is like your bonds, your loosely sukuk. Okay, within the Sharia compliant Islamic financing space. Okay. The reason why you want to push more of your investment into equities is because that's where the growth comes from. Okay. As the market, as companies increase in their profitability, the share price increases. That's where your growth is. Okay. However, you have to be aware when you're constructing a portfolio, you may need the money in 10 years down the line, 7 years down the line. The portfolio construction for you would be radically different from someone who has a 15-year, 20-year plus investment horizon. If I was to look at my investments back in 2008, 2009, I would have lost around 30% plus. When I say lost, I'm in quotation marks. It's a paper loss, right? Okay. The reason why that is, you had market crash. But I didn't change anything. didn't do one minor change to my investment portfolio because I understood what the fund manager was doing. Okay, you have to have a principles of investments in place, and those principles really come down to things like geographic asset allocation. Okay, what's the split between equity and fixed interest? Okay, how are you identifying how are you identifying the underlying stocks that are going to be within your portfolio? So in my portfolio, you've got over 10,000 stock, and I know within the investment industry there is this concept of, are you diversifying away your risk, or you're diversifying away your return? Sorry, okay, by having so many holdings in one particular portfolio. Okay, I disagree with that position. Okay, and I disagree from a macroeconomic point of view, which I won't necessarily go into it in this particular topic, but the financial science is just spot on. Okay, in the sense that when it comes to economic times of volatility, okay, if you are invested in a lot more entities, okay, if you have a lot more holdings within your portfolio, you are going to be reducing your exposure to losses. Okay, in contrast to if you only have 20 or 30 stock in your portfolio. Okay, look, if I've got 10,000 stocks in my portfolio, what does that mean? That means 10,000 companies have to fail, right? Yeah. Okay, if I've got 20, 30 companies in my portfolio, that means only 20, 30 companies have to fail. Yeah. Okay, now when you're in a regulated listed portfolio structure, okay, the level of due diligence the fund managers have to do on the underlying stock to put it into their portfolio, it is phenomenal. That is the advantage of investing via a UK regulated market. You are not going to have the same level of due diligence if you were to invest, for argument's sake, and I do not mean any disrespect, but right now through, let's say, the Dubai Stock Exchange, okay, or in any other emerging jurisdiction, okay. It's because the regulatory protections at so many different levels in the UK is near enough second to none. There's only a handful of jurisdictions around the world that can actually say that. You've got the UK, you've got the US, you've got Singapore, Hong Kong, okay, Japan, okay, some parts of Western Europe as well, okay, but not to, it's a handful. Now, there are emerging economies here, and they are going to be improving their regulatory practices, okay, but when that happens, okay, you can, and you are internationally mobile, you're cultured enough to integrate into those particular societies. When I say integrate into those societies, I'm talking about integrating professionally into those particular societies, understanding the systems. So you need to be aware of how those particular systems, the compliance regimes, the regulatory regimes, all of that actually works for it to add value to your portfolio. Now you can access those markets via investments, via a professional fund manager in the UK, no doubt. But it's different from being in that particular country and investing as if you were a local as such. Now, coming to your question though, okay, which is how do I invest? Okay, like I said, I had a very long investment horizon, so it's 100% in equities. Subject to your investment horizon and your appetite for risk as well, Tohidul. You could be quite risk averse, okay? So risk averse that a 10% fall in your portfolio, okay, is going to cause you a heart attack. Okay, I remember you mentioning you went through a particular heart attack in the CFD space, right? Yeah, that is one of the most volatile asset classes there are.
I was day trading.
Yeah, there you go.
Scalping.
There you go.
It was when we first started. Obviously, it wasn't a bull market. It was a bull run.
Yeah.
after 2008 crash,
Yeah.
and it was only going up.
Yeah.
So obviously, I was like, "This is easy."
Yeah.
And then the volatility started.
Yeah.
And then I think I remember one time I was on holiday, and the Dubai Stock Exchange just went straight down,
Yeah.
something like 600 points
Yeah.
at 6 a.m,
Yeah.
and my laptop alarm just went off.
Yeah.
I looked at it, I'm like, "Ooh, there goes my all my account into negative." And then like within minutes, it went back up again.
Yeah.
It was a real roller coaster,
Yeah.
and it started happening more and more frequently.
Yeah.
So I think that's not exactly a great investment strategy for.
No, it isn't. But you were taking, let's say, more than entrepreneurial risk here. Okay.
On hindsight, yeah.
Having said that, though, okay, you could do it for enjoyment purposes. All right. As long as there was a bit of money that you have, like, you know what, this is my play around money. Okay.
Yeah.
If that is money that I can afford to completely lose, do you know what? Fair play. Go do it. Okay. Sometimes, all right, Tohidul, all right, I get some clients who actually, I had a couple of clients in the past who I managed money for, but they've gone on to invest into Bitcoin without telling me. Okay. All right. And the reason why they didn't tell me is because I'm very anti Bitcoin, and I have been since 2020. And I wrote 2 papers on this in this particular space as well. We're not going to probably won't get a chance to speak about stable coins, but my thesis back then is coming true today. Okay, so ultimately they lost over 60 grand. Okay. Now, but those type of investors, they just about were able to afford that loss. Okay. However, okay, if you've got amount of money, okay, that you can afford to lose, even at that level, all right, I would still seek some level of professional guidance.
So did they put this invest 60,000, or was 60,000 including the profit?
No, 60K was the original investment that went in.
Okay.
Okay. So, and it collapsed. Now, where it is now, I don't know, because we haven't touched base on that aspect of the investment. But I think at that particular point, I did say to them, look, just hold on to it for now. Okay, because you've got volatility in this particular space, and Bitcoin has largely recovered since then anyway. So they could be doing a lot better. But I do have another chap who invested into Bitcoin early on, okay, very early on, to the equivalent of the proceeds of a property in London. Okay?
Okay.
He has done astronomically well. Okay? Now, I'm not saying don't invest into Bitcoin or cryptos because you can't make money. Okay? I am saying the volatility in this space and the macroeconomic and political influences in this space is too astronomically great. Whereas the entire thing, the entire ecosystem in the decentralized space, and I say decentralized with quotation marks here, okay, it could quite easily collapse. And if it does collapse, the value of Bitcoin would also collapse. Okay, yes, that is quite, how do we say, anarchic, okay, in this particular space, okay, but yeah, that's my philosophical position in this particular space.
I suppose this is more for if you got money that you can lose and not lose sleep
correct.
over it.
Correct.
Then you can invest in it.
But coming on to this subject for most of the viewers, okay, it could very well be, okay, before you think about putting money aside for you, it could be putting in place a life policy for your parents.
Okay.
Okay? And let me explain that. Your parents are a lot older than you.
Yep.
Okay? Now, consider if you combined with your siblings, if you have siblings, okay, and subject to the health of your parents, okay, came together and said, look, why don't we take out a whole of life policy for mum or dad? Okay. That whole of life policy, subject to the age, could cost you a few £100s a month. Okay. But you need to consider a whole of life policy as a long-term savings plan, provided you maintain the premiums. Okay. So the way a whole of life policy works is the insurance company promises to pay out a tax-free lump sum when that particular life assured passes away. Okay? Now, let's say a whole of life policy for £1 million, it costs £500 a month, or even £1,000 a month. Okay? But between now and let's say average life expectancy, which is 84, 85 today in the UK, an event happens. That event being mum or dad passes away. Okay? That's £1 million coming out. That could be settled into a trust fund for you and your siblings. And each one of you is paying your portion towards those premiums. Now you compare that against taking out an ISA or a pension or a general investment account for you that would get 5-6% a year. Do you see what I'm saying?
Yeah.
Okay. What I'm trying to get you to do is broaden the way you actually think about investing and building wealth. Okay. Investments are volatile.
Yep.
Okay. So you need to be thinking on a multi-general basis to build wealth and also preserve wealth. Do not underestimate the preservation of wealth. Now, having said that, moving forward, the other thing that I would say, before you even think about putting your money into the stock market, have you protected your lifestyle? Okay. What I mean by that is, heaven forbid you get unwell. Is your income protected? Okay. If you get critically unwell, so you're not going to be able to work going forward. Heaven forbid you suffer cancer, brain disease, or many other different ailments affecting so many of us today. If you don't have a lump sum payout, are you going to be able to access the best type of doctors to get you on the most optimum recovery plan? Is there going to be a fund at the most crucial time that your family needs to help support young children? Your spouse, your long-term partner. Okay? These are really important considerations. And often people think it will never happen to me. I am going to live forever. I am 70 and I am fit as anything. I mean, the amount of these conversations I've had.
I think when you're young, especially, you've just graduated, you're fit and healthy, it's the last thing you ever think about.
I know.
In my 20s, I've never thought about these. In my 30s, I never thought about these things. Now, in my 40s, I'm thinking, I really should start thinking about these things. But I should have started thinking about things back in my 20s.
Correct.
As soon as I graduated.
Correct. So even my young daughter, okay, she's in her 20s now, all right. So I told her, look, as soon as you get your job, okay, the very first thing that you need to put in place is a solid life insurance policy, okay, for as long as possible, for as much as you can afford, okay. Now, remember, when you're young, when you're healthy, the premiums are going to be cheap as chips.
Yeah.
Okay. And you can get a lot more for your money as well. Okay. Now, like I said, I think it was last week. Okay. But average salary in the UK is 42,000 a year okay, for graduates. Okay. Subject to your disposable income, okay, taking out a life policy when you are 40 or 50 is going to be considerably more expensive than you are at age 20. Okay? It's going to have so much more impact on your lifestyle, okay, at that particular point than it will now. Okay? So, and at that particular time, you could be married, you could have children, and heaven forbid if something was to happen, at least there is a sum of money here that could support the family. Hence why I say, okay, when it comes to financial planning, all right, number one, I'm a big advocate of improving financial and legal literacy. Okay, that discipline in having that mindset, you know what, I need to put in place all of these type of protection plans. Okay, because it's going to have, yes, lifestyle benefits, but it's also going to have succession planning benefits for my children. Okay, you may not need to pay someone like me a hell of a lot of money in 30 years down the line because you've got a huge inheritance tax bill or a very significant capital gains tax bill. If you've structured your affairs well from day one. Okay? This is where the ongoing private client wealth management advice is increasingly important for more of us. Okay? Now, let's say you've done all of that work. Okay? What is the best type of investment to actually go into? Okay? Whether it's going to be stocks and shares, whether it's going to whether it's going to be a buy-to-let property. Okay? In all honesty, okay, it's more to do with the tax wrappers, okay, than it is to do with the underlying assets.
So when you say tax wrappers, what does that mean?
Coming onto it, okay. So tax wrappers are things like how you actually hold your investment, okay. So an ISA will be a tax wrapper. So you can invest into the S&P 500, the FTSE 100, or many other indices, okay, that are available. But if it's held within an ISA tax wrapper, your gains are going to be tax-free. Okay, capital gains tax-free. Okay, it's going to be free from any dividend tax as well, free from any income tax. Generally not free from UK inheritance tax. Okay, but all of that money now is growing within an ISA environment, right? But you're limited to investing 20 grand a year. For most people, 20 grand a year, the ability to invest 20 grand a year into an ISA is more than enough. Okay. But if you were to invest equivalent 20 grand into an investment outside of a tax wrapper, that growth is going to be taxed at CGT rates, the prevailing CGT rates. CGT is an acronym for capital gains tax. It's a tax that the government charges for any gain in your investment. Okay. So hence why I say the tax wrapper is more important often than the underlying investment. You need to get the tax wrapper right. Then you've also got pensions. Okay, so pensions, you benefit from tax relief, okay, generally on the way in, okay, so you get tax relief on your income, and especially if your employer's paying money into your pension as well, there's tax relief there too. Okay, so effectively you're paying in, the government is paying in, and potentially your employer is actually paying in. So the way you can actually build up within a pension your underlying investments, okay, the value of your investment could be a lot faster than going into an ISA. The reason being is you've got that additional tax relief on the way in. Whereas in an ISA, you've already paid the tax, right? You've already paid the income tax. So you're funding an ISA from what we call net pay.
Yeah.
Okay. So once you've got the tax wrappers in place, then it's really about, you know what, I need to structure my investments. And this is where I was talking about your attitude to risk, your need to take risk, your capacity to take risk. It could be very well you are quite risk averse, okay, because you're not aware of how the financial services industry works. You're not aware of how the investment market works, Okay, so it could be you want to take smaller amounts of risk during the beginning, and as your confidence builds up over the years, then you can move into higher risk asset classes that have a better chance of driving growth. The biggest impact to your investments or potential investments is going to be inflation. Okay, if you don't do anything, so even cash in your bank account, that's effectively investment. Okay, you're literally lending money to a bank, right? Okay, that's why when your debit card. Okay, in Latin it means the sum owed. Okay, the debit. Okay, so that's the sum owed to you. Okay,
Right.
all right. So you're effectively investing in cash in a bank. Okay, but if inflation is running at 4%, 5%, 9% a year, the purchasing power of your money is reducing every single year. So you may have £10,000 still in your bank account that you put in place 15 years ago, okay? But guess what? £10,000, what you could buy with £10,000 back then is nowhere near what you can buy today.
We were talking about this on one of our groups the other day, because locum rates are going down.
Yeah.
So back when I qualified, 2005, locum rates were averaging around 25 to £30 an hour.
Yeah.
Right now, the average locum rate is back down to 25 to £30 an hour.
Yeah.
But it's not the same 25 to £30 an hour.
Totally.
I mean, I think £25 now is worth about £11 in 2008.
Yeah.
Right? It's less than half.
Yeah.
So for those of us that started, that have been around for that long, money back then was worth a lot more.
Yeah.
And if you don't get your savings in the right place,
Correct.
that will really have an impact later on in the life.
Totally.
So, I mean, in terms of the actual investments of your salary, most pharmacists will be, or even any healthcare or any professionals that are working, they'll have around a set amount of money that comes in every month. And from that, you've got your mortgage or rent, your food, shopping, any discretionary items that you buy. How much money should you be putting aside for your savings and investments?
So I generally advocate something known as the 50-30-20 rule. Okay, it's easier said than done, but it's more about the principle. Okay, so 50% of your net income should go to essential expenditure. Okay, 30% should go to non-essential expenditure. Okay, and the 20% should go to things like discretionary debt payments and savings and investments. Okay, and I'll clarify what I mean by discretionary debt payments here in a second. Okay, so essential expenditure is your rent payments, your mortgage, your council tax. That is literally the amount that has to come out. And I'm assuming right now you don't have any debt. Okay, otherwise debt payments would be in that 50% essential expenditure as well. Okay, then you've got the non-essential expenditure. Okay, that's your lifestyle. That's the stuff that makes your life sweet. Okay, now when it comes to the final 20%, okay, it is incredibly important to, in this day and age, okay, to invest in yourself. Okay, so that means that you've identified a little bit earlier. All right, your income hasn't gone up in real world terms. It's not just the pharmacy industry, by the way. It's across the entire country. Wage growth is near enough negligible. Okay, in real terms. Okay, so how can you beat that market? in that sense. Okay. And the only way that I can see is if by investing in yourself. So that means, how can I learn new skills? What is it going to cost me to learn new skills which will allow me to be more attractive in the marketplace?
I think that's a very, very important point. And this is a discussion that we have quite a lot on our network. And some people are of the view that why should I keep on learning more or doing more? Because the more I upskill, that means the more work I have to do for the same pay, right? The pharmacy industry is quite unique in that if you're a locum, and predominantly most of our members are locums. Initially, first our job is to be an RP, right? Do the NHS services. And then now
RP registered?
Responsible
pharmacy. Okay.
So in all community pharmacies in the UK, you can't open the pharmacy and operate unless you give out prescriptions or set prescriptions and dispense those prescriptions and do any of the clinical work unless there's a pharmacist on site signed in as responsible for everything that's happening within that premises. That's changing soon. So now a technician can be responsible for running the pharmacy.
Okay.
But you'd still need a pharmacist to do the clinical services, to sign off on prescription, to do the actual clinical checks on prescription, and still take legal responsibility.
Okay.
Those prescriptions. But now the focus is a lot more on private services. Weight management. Manjaro is a big thing.
Say that last word again.
Manjaro. The weight loss.
Oh yes, of course. The weight loss.
Slimming jabs. They're a huge money maker for a lot of pharmacies.
Okay.
There is HRT services, TRT services. There's a whole list of private services. I've seen one pharmacy that does over 125 different private services.
Wow.
Including aesthetics. So pharmacists can do a whole lot of different things. Now, I'm an advocate of upskilling. And learning new things, and if you don't upskill, if you don't learn new things, you become stagnant in your profession, in your career. And I think pharmacists now have this unique opportunity to do a lot more clinical services. And from the perspective of a pharmacist, not trying to play a GP or a doctor, but from our own perspective, and that can have a huge benefit on how much we can earn.
Totally.
I mean, I've been telling people, look, the private services that are coming, and this was a good couple of years ago now, I've been trying to set the network up and have companies in place that will train people to do those, upskill themselves, and set up private pharmacies, set up online pharmacies, get the marketing and everything done. But most importantly, make sure that they can earn more money. Right, and you're not just chasing the next available shift at the highest possible rate, which is now getting lower and lower every year. And the number of pharmacists are increasing. I think there's a new school opening up every other week, practically. Right?
Wow.
The pharmacist number is about 60,000 now, and you'll probably, at this trajectory, in the next few years, it will hit about 80,000.
Wow.
Okay.
Is there enough demand?
No, there isn't. There isn't enough demand.
Wow.
Two, the number of actual pharmacies in UK is around 13,000, and that's dropping fast. Because the government isn't giving enough funding. And then rather than give enough funding, what the government decided to do, with advice from some of the bigger organizations, is increase the pharmacist numbers. Change the RP regulation so there isn't as much demand for pharmacists. And now you'll have, over the next coming months, I think it'll hit really hard, where there'll be a huge number of pharmacists out of work. And because of that, the wages will take a massive hit.
While you've been speaking, Tohidul, I'm just running through an easy way how automation is going to impact.
Automation, so I'm really into my automation and AI and stuff. I mean, AI on its own is a whole separate topic.
Pharmacy could just simply be a distribution center.
Yeah. So
Okay.
a lot of these are like they call them hub and spoke. We call them hub and spoke.
Hub and spoke.
So,
Okay.
yeah. So what we'll eventually see is large size in industrial areas where they do all the dispensing.
Yeah.
And the spoke, the smaller pharmacies,
Correct.
that will just basically take them in,
Correct.
hand them out, or it can go straight from the distribution site.
Yeah.
Now, where pharmacies will be focusing on is doing the actual clinical services, and that's what they'll be paid for. Now, this goes back to upskilling and having more learning new types of skills, weight management, and hormone therapy and all that stuff. That where you can earn the money for the skill that you bring in managing that patient's lifestyle and that condition. But that will only be for people who've invested that money.
Yeah.
It goes back to what you said, invest in yourself.
Yeah, totally.
And you can maintain that lifestyle or you can improve that lifestyle. We want to not just maintain, we want to improve. We want to keep moving up in the world, right?
Yeah, correct.
So pharmacy is in that critical phase where I think, and it's really, really crucial for the profession to understand this. And I know I can already picture a few people on the network who'll be like, I don't want to be upskilling anymore. It's not worth it.
That's the wrong attitude, Tohidul. And that goes for not just the pharmacy industry, in any particular industry. You need to have a culture of learning. And it's not just, I would say, about increasing your income, but it's also protecting your income. Because if services that you're doing right now can actually be taken away, and your service can be taken away, what other value are you going to be adding to the marketplace? Okay, so there's no two ways about it. You're literally going to have to learn. And when I'm advising people to have this culture of continuous learning, make no mistake, I follow that advice as well. Okay, so look, I think I qualified. Was it graduate, postgraduate, then my professional qualifications as well. So I was able to do my work from 2013, I think it was. Okay. But even then, okay, from 2013 to now, every year or every other year, I've done an exam. I'm doing a postgraduate qualification over the next 6 months. So I'm not even taking on any new clients, okay, for the next 6 months until April 2026, okay, because that's how invested I am into professional development, okay. Because I know the trajectory of my own particular industry, yeah, and I am effectively trying to manage a whole host of potential changes that I think is going to be encroaching my own industry. Okay,
so it's not just pharmacy.
It's not just pharmacy. It's practically every industry. But that culture of learning, surely.
Yeah, I mean, apart from the changes that are being forced upon us.
Yeah.
I do believe, I've just started doing my independent prescribing course.
Well done.
And I've put that off for a long time.
Yeah.
And I was like, do I really need to do this? And now that I've started and I work face to face, I see patients. I mean, my very first case the other day in the GP surgery was a really, really interesting case.
Yeah.
And where it was just simple blood pressure patient. We thought, well, patient's blood pressure is going low. It'll just be a quick call. How are you doing? Just giving a review about your call. Then we looked into it. Yeah. And there was like a whole list of different problems that are coming up.
Wow.
And now this patient's got basically potentially orthostatic blood pressure. Yeah. So basically when she gets up, because she's got type 1 diabetes, we have these baroreceptors around here.
Okay.
Right? So when you have type 1 diabetes, because diabetes pretty much damages all your blood vessels and your nerve endings and stuff, they don't work properly anymore. So when she gets up, her blood pressure drops and she can't manage that properly. And I've never come across that situation. I mean, we give blood medication to lower people's blood pressure. But this one's blood pressure's gone down. Yeah. Got to have to increase it. And then manage the diabetes and then manage the cholesterol levels and all sorts of other stuff that come into it. That's just so much more interesting than just purely working and doing the same thing in community pharmacy day in, day out. We don't see that level of clinical cases, right? And if I wasn't an IP, I wouldn't be exposed to this kind of work. So aside from, upskilling and learning something new, it makes the job a lot more interesting that you can deal with the more complex
Yeah,
cases
no doubt.
that you don't normally see in practice. But then, to add to that, once you've got these skills, you can apply it into private practice,
Yeah.
and that's where I think the locums should be moving to, the pharmacists should be moving to,
Correct.
because you've seen companies like Hims, MedExpress.
Yeah.
Medex is probably not the best example because they're not the most ethical.
Yeah.
But you've got companies like Hims, you've got Manual,
Yeah.
Newman. They've come up from nowhere.
Yeah.
All private healthcare companies. I'm not sure if you know about the history of Hims and Hers.
No,
in America. Back in 2016, they set up. They invest over 50% of their revenue back into marketing, right?
Okay.
And they've gone from literally nothing to a company now that's worth over $1 billion.
Wow.
The turnover is over $1 billion.
Are they a good company? I mean, talking about in terms of ethical standards, industry standards.
Yeah,
I don't know.
They seem to be
Okay.
quite a good company. And but what's interesting is the way they've been able to market private services that were
Okay.
taboo. They started off with erectile dysfunction services.
Which one?
Erectile dysfunction.
Okay.
Something that not a lot of people like to talk about.
Yeah.
Right. When Viagra first came out, everyone
Yeah.
was like, we don't want to be talking about this in public.
Yeah.
But now they've made that taboo topic more openly talked about. It's
Okay.
changed a lot of lives.
Yeah.
And I think if you can do a private service properly, if you can set up a private clinic or a private pharmacy properly, and you are really good at what you do, you understand the disease area that you're prescribing in, you can really change people's lives. And you can do it faster than someone having to wait to see their see their GP, which right now is damn near impossible to see someone unless you're making an emergency appointment on the day, take the day off work, and then go see your GP and then wait for a test to be done.
Yeah.
So there's a huge gap in the market that pharmacists can fill and should be filling, and with the number of pharmacists only increasing, we're going to have to start changing the way we work. And from next year, every pharmacist coming out will be prescribers automatically.
Remind me, how many locum pharmacists are there right now in the UK?
So there's about 60,000 pharmacists registered at the moment. Of those, 70% work in community pharmacies. So it's about 42,000 to 43,000 at the moment. There was a few data leaks, so that's how I know these figures at the moment, that the number of registered locum pharmacists with agencies and certain chains is around 40 to 45,000.
Okay.
So,
and what's the demand like?
Demand-wise, so our last research that we've done, the survey that we've done for TPC was that on average, I think about 20 to 30% of the locums couldn't get any work for up to 20 days of the month.
Wow.
So
Is
this
that
was
20 days
year.
each month, so they're only
Each
working
month.
10 days a month. Oh my gosh.
So this oversupply should have been around for a long time.
Yeah.
At least the last 5 years that I know of.
Okay.
Right? Obviously, there was the whole COVID time was different.
Okay.
It was unique in the way that nothing's ever hit this industry like COVID. But it was good for a lot of the locums because demand went up because a lot of pharmacies were off as well.
Okay.
But it was high risk time.
Okay.
Very high risk time.
Okay.
But
What's
now,
the trajectory? Trajectory in terms of are locums likely to, is demand likely to catch up to supply, or are we seeing a bleak future for locum pharmacists?
if we continue in this trajectory of the pharmacist numbers only going up each year, it's bleak.
Okay.
Okay. And I'm being very, very realistic here.
Yeah.
I'm not going to try and sugarcoat this.
Yeah.
I'm not exactly known for sugarcoating anything. But this
second that.
especially,
Yeah.
unless you're giving me a donut. But the trajectory is not looking good, which is why I've been saying for at least the past 1 year, look, just focus on getting those IP qualifications.
Yeah.
We were actually the first one to try and set up this network of DPP soft pharmacists, find it easier to become IPs because we needed someone to train us. And we were also one of the first ones to really push people into private services and just get it into the mind that, look, we need to do something different from just purely locuming. There is a lot of people who want to fight back, who want to enforce the cap number, but that will take time.
Yeah.
It will take time for the government to see that, oh, look, all these pharmacists are out of work. We need to do something about this.
Yeah.
I mean, pharmacists are coming out with 60 to 80,000 pound of debt.
Wow.
Right. And then there is next to no work.
Yeah.
So it's not looking.
Did you say, sorry, Toy, did you say 6 to 8 or 60 to 80,000?
80,000 in debt. Right.
Wow.
The last one I checked, last time I spoke to a pre-reg trainee pharmacist a couple of years ago. He had a debt of about 50 or 55,000 pound student loan debt.
Wow.
So when you come out with that kind of a debt and you've got very little work out there, you need to. There's two things you can. You can either go back and retrain as something else, another profession. A lot of pharmacists are now going into studying medicine.
Okay.
And I think we know what the salary of doctors are at the moment.
Yeah.
There's dentistry. A lot of them are going into or optom. The medicine, pharmacy, dentistry, and optom are four professions that are very close.
It's going to near enough double their debt.
Yeah,
isn't it?
Yeah.
Okay.
So that's the kind of the future we're looking at for pharmacists at the moment. I mean, so we are trying to get the pharmacists to work together to understand that we have a certain value, that we need to negotiate according to our value, and not to work for companies that make things more difficult for us or try to control the sector.
Yeah.
So I think it is more important than ever that we do continue to upskill, keep our options open and as broad as possible, and make sure our finances are in perfect order.
Yeah. I think another note while you were speaking is something also I'm doing with my own business development, but I think locum should also consider is the feasibility of becoming internationally mobile. And it's going to be those locums who get along with a variety of different people. You need to have a global mindset in engaging with different types of people, immersing yourself in different cultures, but can you move to another jurisdiction where you can ply your trade for a few years?
I think with the pharmacists, it's quite an interesting one because the English-speaking countries, you've got America, Canada, Australia, New Zealand. Those four countries, a lot of healthcare professionals from UK do go to those countries.
Okay, nice.
Because one of my cousins recently moved over to Virginia in America.
Okay.
And his wife's a dentist, he's a pharmacist, and he's, I think at the moment, on $150,000 or $120,000, I can't remember off the top of my head. But because of the lower tax in America, his money goes a lot further.
Yeah.
And his wife's a dentist, so comfortable life.
Yeah.
Right. And less stressful.
Yeah.
The work is a lot less stressful than UK.
Okay.
At least where he is. I know America is going through its own issues in the pharmacy sector. But then you've got Australia and New Zealand as well.
Okay.
And there was a Canadian pharmacy chain that came over to UK a couple of years ago. They wanted at least 500 pharmacists from UK.
Wow.
Their golden handshake to sign on to places that were like frozen most of the year was about $50,000, and yearly salary being around.
But it's frozen, bro.
That's frozen. I mean, some of those places are like near the Arctic. I wouldn't go there. I'm more tropical. But they had very good salary. So if you don't like if you like the cold UK weather, but you want somewhere a bit more colder, then Canada's a place to go.
All right.
But the salary is good.
Yeah.
Right. And I think it is worth considering, given the number of pharmacists only going up in UK.
Yeah.
If you want a comfortable lifestyle, you want to travel for a bit and you're still young.
Yeah.
I think Canada, USA, Australia, New Zealand are great places to even think about. And a lot of people want to go to a lot of the Muslim pharmacists that I speak to. They want to go to Muslim countries and move there. And I think the closest in terms of how pharmacy works is in Malaysia.
Okay.
Because you get a lot of Malaysian pharmacists actually coming over to UK as well.
Okay.
There's also a lot of people want to move to Dubai, but the salaries really aren't that great for Dubai or across Middle East, unless you're working in hospital or industry. The community pharmacy is completely different over in Middle East compared to.
But it doesn't feel like you have a community pharmacy around there. It's very much commercialized.
It's very commercialized, but I think from the one I've spoken to a few when I was in Dubai. There's a few Boots pharmacies there as well, and I think when I spoke, this was going about 10 years ago. I spoke to a pharmacist there, and I think she was on about 8,000 dirhams.
Okay,
which
when I've been there, like in Saudi in particular, I get the impression they're always pushing another type of product. You come in for
it's very commercial. It's very
that's
commercial.
what I mean by quite commercialized.
But I think there is. So one of my business partners, he's moved to Dubai.
Yeah.
So we set up a marketing company a while ago, and we were looking at working with healthcare companies out in the Middle East and across Middle East. There is a lot of opportunities in hospitals across Saudi Arabia. You know, the NEOM and the new investments that they're doing.
Yeah, of course.
So there are some pharmacists from here that actually moved over to NEOM City to do project management on a hospital.
Okay.
So there are some interesting jobs out there.
Yeah.
And where our skills can be transferred or very similar, that we can manage the new job. Yeah. And I think the most important thing is you have to be flexible.
Yeah.
You have to be willing to see things from a different perspective and try something new.
Yeah.
Which is, I suppose, is easier when you're young. You've just qualified. You don't have anything tying you down.
Yeah.
But obviously, once you're married, you got kids, or you got a family there. It's a lot more difficult. Yeah. So I think coming back to I know we can digress quite a lot. Coming back to our original point of savings and investment. Obviously, we've talked about the investment strategy of where to invest your money in the long term, short term, how much you should be saving. The other issue which we touched on, the student loan.
Yep.
Yeah. I think another thing we need to look at is, how fast should we... So if your only major debt when you're coming out of university is a student loan, how quickly should you pay that off?
Very slowly.
Very slowly.
Very slowly. Okay. I'll tell you why. Okay. Not everybody is going to be paying back the student loan. Mm-hmm. Okay. Because not everybody is going to even be meeting the threshold income. Mm-hmm. Okay. Unfortunately, in the economic environment that we're actually moving into. Okay. And when I say not everybody is going to be paying off the student loan, I mean at the 100% level. Okay. Mm-hmm. Let's say your loan is 60 grand. Okay, that includes not only the student, but also the housing allowance and stuff like that. Okay. You've got a 30-year term effectively to play. So after 30 years, it wiped out. The balance is effectively wiped out. There is a threshold as well. I think it's 26,900 or 700 or so. Mm-hmm. So you only pay once your income is over that particular threshold. And then you're only paying at 9% of that income anyway. Okay, the 9% isn't the tax rate. 9% is the amount of amount of tax that you're paying over that benchmark amount, which is around the 26 grand mark I mentioned. Mm-hmm. Okay, so when you look at it that way, it's quite affordable, especially if you're then looking at average income for graduates is around 42k a year. Mm-hmm. Of course, in the pharmacy space, it's generally a lot higher. Mm-hmm. But if you've got 40% of the locum pharmacists out of work, then your income is probably going to be a lot lower. Okay, in that unless you train up. Okay. So I would say, and the amount that you pay back is going to be linked to inflation anyway, largely linked to inflation. Okay, so around 3.2% or so. In a scenario like that, you've got other things where you can put your money towards. Okay, and those other things should be looking at lifestyle protection and then putting money away into your ISA, your pensions and so forth. Okay. The student debt, yes, it's quite high in capital terms. Okay. But ultimately, the investment growth that you get elsewhere could very much exceed the inflation rate that is charged effectively in your student loan, or the interest rate which is linked to the inflation, which is charged to your student loan. So I wouldn't say you need to worry about it too much. Okay. However, remember that the student, when you're studying, okay, when you're deciding which degree to actually study, increasingly it is important to give some hard thought in terms of where is this particular degree going to get me? Okay. What is the income potential, the capital potential in the career that particular degree is leading me down?
And I think I saw one of your posts on LinkedIn about this Mickey Mouse degrees.
Oh yeah, get told off, man. I'm purposely avoiding that today.
No,
I didn't mean to offend
I
people.
do think it is. I think what you said was very, very important, though, because, and this leads me back to the pharmacist numbers.
Yeah.
Right. You've got the difference in quality of training of the teaching at universities. So pharmacists coming out of certain universities, their level of clinical knowledge is a lot lower than some of the more well-established universities. On top of that, when you've got so many pharmacists coming out every year, the value goes down because there's a huge supply, right? Relative to the demand. So if you're in college and you're thinking, what degree should I be applying for? Then think long and hard. By the time you qualify in 5 years' time as a pharmacist, what will your demand be?
Yeah, totally.
And what can you do with this degree? Because if there is 80,000 pharmacists and there's less than 10,000 pharmacies in England, or Scotland and Wales, there's only a handful of pharmacies anyway. Then who else are you competing with? You'll be competing with people who've been around for 10, 20, 30 years.
Exactly.
Who have a lot of clinical knowledge. And you've just come out of university. Right.
Brilliant point.
So I do think your post was very, very relevant. Especially in this climate and where we're heading, the trajectory of the pharmacy profession. Now, if the government steps in as well, and actually let's reduce the number of pharmacists, we'll have only 50,000 pharmacists, right? Then, yes, think about going into pharmacy.
The market is going to dictate that, Tohidul. Okay, we're seeing radical changes in so many areas of the economy. Okay, we talked about automation briefly. Okay, AI playing a huge part. Okay, we need to be thinking globally, and what I mean by globally is, look, the world is literally your oyster. You need to have a mindset of, look, if there is not a strong enough demand for me in the UK, I need to be willing to move to another jurisdiction. Okay? Couple that with your CPD, your continued professional development. Okay? You're going to be okay. It's a mindset shift, it's an attitude shift. But this is where I also think parents need to play a bigger role in assisting more of their children in choosing the right type of career path. Like, my daughter is a phenomenal artist. Okay, but she's not going to be studying art for degree, at the degree. She really wanted to. Maybe another question. All right, but she is young enough and wise enough to decide. You know what? Art is not a degree. I'm not going to be pursuing art at degree level. Okay, it's more of a vocation.
Yeah.
Okay, and you can do some great stuff in that particular space as a side hobby.
Yeah.
Okay, there's not many artists who I know are very wealthy. Okay, there's not many wealthy teachers I know. In fact, I'm a strong advocate who actually believes teachers should literally be earning a good close to 100 grand a year or more. That's how important teachers are to our society. Teachers do a lot more than teach. Okay? They have your children, they have our children for 8 hours a day. They are the second parent.
Yeah.
They're the counselors. Okay? They're the ones who are teaching character to our children.
Yeah.
The standard of our teaching, yes, must be looked at. Okay? But we should be, yes, proud of our teaching profession, but we damn well need to reward it a hell of a lot more than we are doing right now.
Absolutely, we do. And I'm going to go into one last question, if you can wrap this up really, because then I think we've gone way past what we're supposed to be doing. And then the next episode we'll really be talking about the Sharia compliant investments, and we're going to be, I think we're going to go way over on that one as well. Yeah. So, right, last question. Should I overpay my mortgage, or am I better saving?
Very good question. Okay, all right. So I'm assuming you mean your main residence mortgage. Yeah. Okay, I'm the person who advocates, yes, you should. Okay, and I tell you why. All right, your main residence, from tax jargon, is called a PPR. Okay, a benefit from PPR, which is Principal Private Residence Relief. Okay. What that means is you sell your main residence. When you come to sell it under current tax rules, which could be subject to change, okay, it's completely tax-free. Okay. You sell your main home. Okay. Let's say you bought it for 200 grand and you sold it for 800 grand. That entire gain is completely free of any tax. You cannot do that with investment property. Okay, so when it comes to your main residence and you've taken out a 80% mortgage, for argument's sake, okay, no matter how much you tell yourself you own that property, you don't. Okay, Halifax does, Nationwide does, Birmingham Midshires does, Skipton does, okay, and the many other banks out there. So what you need to be doing, okay, is buying equity in your property. And the way you're buying that equity back, or equity, okay, is getting rid of that mortgage as quickly as possible. Now, there's not many asset classes out there that can give you an immediate return, tax-free, which is near enough no risk, other than paying back the mortgage in your main residence. Okay. Now, there is an argument to actually say, look, all right, if I was to sell up and use the proceeds, I'm going to be buying another property similar value. Okay. And I just get another mortgage. But you could be a lot older at that particular point. You may not have the same level of income potential at that particular point. Okay. There could be a whole load of other stuff going on in your life. As part of your financial planning, you should also be considering, do I need to downsize at some point in the future? Because I have a 3-4 bedroom now because I've got a couple of children, but my children, when they've left the nest, do I really need such a large property? Now, you may do because you've got grandchildren and all of that sort of stuff. But let's say you don't. Then you downsize. All of that growth that you've got in your main residence from the sale proceeds, okay, can be used to have a sweeter retirement. Okay? Don't underestimate well-being when you are older. You need to be taking, okay, more holidays, okay, continue your learning even then, okay, before your health deteriorates.
And on that point, I think we're going to have to end it today.
Cool.
Because, yeah, Tayo's going to kill me because we have actually gone way over.
Truly a pleasure.
So, no, thank you. That was really important. And I'm sure off the back of that, we'll have a lot more other things to discuss as well. And next week, we'll be talking about Sharia compliance and funding and financing your pharmacy, your next purchase of a business. So, see you on the next one.